We've all been told that having the right strategy is the key to trading. But what if I told you that's only half the battle? The truth is, your biggest enemy isn't the market, it's your own mind. Today, we're exposing the most common psychological traps that keep traders from becoming profitable. I've lived through these myself, and I'm going to share the simple, practical steps I use to overcome them. Pay close attention, because fixing even one of these could change everything for you. Mistake number 1. FOMO. The fear of missing out. Asterisk. You see a coin or stock rocketing up. Every part of you screams, "This is it. I have to get in now, or I'll miss out forever." That feeling is FOMO, the fear of missing out. It's driven by optimism and the painful memory of past opportunities you hesitated on. It makes you jump into trades without a plan, chase pumps, and follow random signals from chat groups. Asterisk. What's the result? You overload your account with risky trades, and often use way too much leverage, thinking this one is a sure thing. But when the trade turns against you, the loss is devastating. You end up angry, confused, and blaming everyone but your own impulsive decision how to fix it. Step 1. Unplug from the noise. Leave the crowded, hyped-up trading groups. They are FOMO factories. Your goal is to develop your own analysis, not follow the herd. Asterisk. Step 2. Build a solid plan. You need a checklist of strict entry and exit rules. If a trade doesn't meet ALL of your criteria, you don't take it. Period. No exceptions. This shifts your focus from chasing every opportunity to waiting for the right opportunity. Mistake number 2. Revenge trading. Asterisk. This is the account killer. You take a loss, then another. Suddenly, logic goes out the window. All you can think about is, I need to get my money back. You start making bigger, riskier trades, doubling down on losses, desperately trying to force a win. This isn't trading anymore. It's gambling, and it's the fastest way to blow up your account. Remember, you are 100% responsible for every dollar you risk. The market doesn't owe you anything. Asterisk. First, limit your ammunition. Don't keep your entire trading capital on the exchange. Only deposit what you're willing to risk in one session, say 2% to 5% of your total capital. If you lose that, you're forced to stop, cool down, and think before you can deposit more. This physical barrier prevents you from making emotional decisions in the heat of the moment. Second, start with stakes that don't hurt. If losing $100 makes you emotional, trade with $10. If $10 is too much, trade with $1. The goal is to train your brain to focus on the process and execution of your strategy, not the money. As your discipline grows, you can gradually increase your size. Mistake number 3. Holding losers, cutting winners. Asterisk. This is the most common trap of them all. When a trade goes against you, hope kicks in. It'll come back, you tell yourself, as the loss gets bigger and bigger. But when a trade is in profit, fear takes over. I'd better take this small gain before it disappears. The result? You end up with tiny wins and massive losses. It's a mathematical recipe for failure. Asterisk. This requires retraining your brain. Start with a simple rule. Your potential reward must be at least equal to your potential risk. When you enter a trade, immediately set your stop loss and your take profit. For practice, set them at an equal distance, a 1-to-1 risk-reward ratio. Then, the most important part? Walk away. Don't watch the chart. Let the market do its job. It will either hit your stop or your profit target. Do this consistently for a month, even on a demo account. You'll not only stop bleeding money, but you'll also build the discipline needed for long-term success. You're trading a proven system, not your fleeting emotions. These hurdles, FOMO, revenge trading, and poor risk management, are like boulders on your path. You can either turn back, or you can learn how to get over them. Overcoming them one by one is how you level up as a trader. I hope these tips have been helpful. Put them into practice, stay disciplined, and never stop learning. Good luck out there.